today's video, I would like to give a quick disclaimer. I am not a financial advisor. The content of my video represents my personal opinions and is provided for informational, educational, and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. As always, conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Hey everyone, welcome back to the channel. This week, all eyes are going to be on the latest economic data that could impact the US stock market. Last week, specifically on the 7th of February, the January jobs report was released. The data showed that the economy added 143,000 jobs, but the unemployment rate fell to 4.0%. Wages grew by 4.1% over the prior year, stirring up some mixed feelings in the market. Looking ahead, we eagerly await the upcoming CPI and PPI reports. The CPI, which measures consumer inflation, and the PPI, which measures wholesale inflation, are both set to be released this week. These reports will provide critical insights into the inflation trends and could influence the Federal Reserve's next moves on interest rates and monetary policy. So what does this mean for the markets? While recent job data hints at a complex economic environment, uncertainty remains high as investors brace for the upcoming CPI and PPI reports. For swing traders, this creates both opportunities and challenges in navigating the weeks ahead. Stick around as we break down this week's market performance, analyze key trends, and explore how these economic indicators could impact major asset classes. And as always, don't forget to like, subscribe, and hit the bell button to stay ahead with all the latest market insights. Before we commence the market performance summary, let's take a deep dive into the QQQ and perform a top-down analysis to identify the key support and resistance levels. We hope to build a clear, unbiased hypothesis based on the price actions, the candlesticks, setting emotions aside, and letting the charts guide our insights. What is the triple Q, you might ask? Well, the QQQ ETF, in full, the Invesco QQQ Trust, is an exchange-traded fund that tracks the Nasdaq 100 index. The next logical question would be, what is the Nasdaq 100 index? Basically, the Nasdaq 100 index includes 100 of the largest non-financial companies listed on the Nasdaq stock exchange, and it is primarily dominated by the technology sector. The ticker for this index or for this ETF is called the QQQ. It is issued by Invesco, and what it's doing is that it's tracking the Nasdaq 100. It has an expense ratio of 0.20% per annum, and the top sectors within the ETF are technology, consumer discretionary, and healthcare. The top 10 holders or the top holdings as of the recent data is Apple, Microsoft, Amazon, Nvidia, and Google. In general, historically, data has shown that the QQQ outperforms broader indexes like the S&P 500 due to its heavy tech exposure. Now let's get into the charts to analyze these financial instruments to gather our insights, our support and key regions, and every other important price action that we might get from the charts. Let's begin by searching for the financial instrument QQQ, which is the Invesco QQQ Trust Series 1. And just before the video, I went ahead to establish this parallel channel where the price action has been trading since October 3rd, 2022. So let's just mark that here for clarity. And we can see clearly that from 3rd of October 2022, the price action, which are the candlesticks, have been trading within this channel. And we're on the monthly chart. Now, if we activate the volume beneath, you can actually also see the volume traded every month since then. Now, at a high glance, we can actually see that the volume since, I would say, November or December, let's look at December here, we can see the height of the bar kind of seem much smaller than the previous volumes. So that is just for our observation. Just so by inspection, we can just notice that the volumes traded on a monthly basis kind of seem on average smaller than the previous month. So that's just a high level summary. For our analysis, we are going to use our typical indicators like the RSI, the MACD, and the ADX. Now, also what I have on the chart are the key regions. So as usual, the white horizontal line is my monthly support, and the yellow horizontal line is my support region at the weekly time frame. Remember, it is called support because it's the candlesticks are trading above these regions. So the idea is that if we have a reversal in price, we expect that there should be a reversal in these key regions because they are support regions. So the idea is that the first region that can be tested is the weekly support, and next the monthly. For now, I don't have the daily support region identified here, but that's also another level which we can have on the chart. Now, if I add the first indicator, which is the MACD, which is the moving average convergence divergence, let's add it to the chart to kind of infer what the momentum looks like. And clearly, we can definitely see that as the price action has been increasing since October 2022, we also see the momentum in the MACD. So as we are having higher highs and higher lows, we can also see the momentum in the MACD. So we can see very good correlation between the price action and the MACD on the monthly time frame. Now, a further inspection or a further check we can make is to see how the divergence between the MACD signal and the MACD level line is playing out. And that information is shown in the bars here. Now, what I want you to see is that recently, in the last 3 months, you can actually see that the height of this bar has been decreasing. So, which is trying to tell you that the momentum has been decreasing slightly because this is December. You can see the bar in November is a little bit smaller, and the current bar in February is a little bit smaller. You can actually see the height of these bars here. So, if I go back to the December, it's 6.35. If I go to January, it's 6.06. So, you can actually see that the height of the bar has been decreasing. So that is telling you that momentum has somewhat been decreasing. Let's also add the RSI, which is a leading indicator that can give us an understanding of whether the price action is overextended or, in simpler terms, overbought or oversold. And just for simplicity, I'm just going to focus on the RSI based moving average because that smooths out the RSI. So I'm going to turn off the RSI and only focus on the RSI based curve, which is yellow. And we can clearly see here that the RSI is approaching 70 region. So it's approaching overbought region. That means that the price action is getting extended even at the monthly time frame. And typically, by definition, we expect that when price becomes overbought, there needs to be a pullback because you can't stretch it. Just think of the stock like a rubber band. There's a limit, there's an elastic limit. So typically, when price begins to enter this region, theory tells us that there's a pullback due because this kind of shows topping. It kind of shows kind of a topping behavior. Like if you look at previous times when the RSI approached overbought region, yes, it can definitely trade within that region for months. But in general, what we expect that's going to happen in the near future is for the RSI to correct back, meaning price action to correct, to pull back, such that the RSI is no longer overextended. The last indicator that I'm also going to put on chart is the ADX, and from there we can start our top-down analysis. So it's the directional movement index, and as usual, I'm going to customize it the way I have described it in many of my videos. So I use white for the ADX and red for the minus DMI. Now what is the ADX, or the directional movement index information, telling us? We can clearly see that the plus DMI is above the minus DMI, which is bullish, and the ADX is above 20, which is currently this is a 30, which is very strong. So in the monthly time frame, we can clearly see, we can even add this moving average just to get another information. And now what I have, if we look at the two curves that are shown, we have the 10 to be the blue curve and the 20 to be the white curve. I just want to focus on the 10 simple moving average for now. And we can clearly see also that the candlestick is trading above the 10 SMA on the monthly time frame, which is bullish. So we have a bullish information here from the candlestick. The MACD is bullish, but showing some little weakening in momentum. The RSI, which is a leading indicator, is telling us that the price action is getting overbought. and we can see that there has been a strong trend in this asset, especially since this stock started trading within this parallel channel. So on the monthly time frame, that's the full picture. The leading indicators are showing us strength, although the strength is somewhat weakening, which is the information we got from the MACD, and the RSI is showing us that the candle or the price action is overbought. Now let's go into the weekly time frame to understand what is happening there. Now, clearly, you can see first of all the weekly time frame how the price action has been trading within this parallel channel that I identified, and we can clearly see the midline of this parallel channel, which is this dotted yellow line. And typically when the candlestick is trading below the midline, we say the sellers are in charge, and whenever the candlesticks is trading above this midline, which is the 50% midline, we say buyers are in charge. Now I want to focus on the 20 SMA, not the 10, when I'm on the weekly time frame. So I'm going to turn on that and turn on this white curve here. So let's first infer information from the SMA. We can clearly see that the candlestick is trading above the candlestick is above the 20 SMA, which is bullish. And what is the volume bar showing us? We can clearly see that the volume in the current week that just finished is a little bit lower than the previous week. So we are seeing some little decrease in strength. Now, what is the MACD telling us? We can definitely see. So let me just focus on the last 5 years to make sure the chart will be clearer. Now, the MACD is telling us here in the MACD we can see that the level line has crossed below the signal line, which is a hold signal. So this is not a very positive signal because we typically want the level line to be above the signal line, and that's why you can see the bars here is red in color, which is showing you some form of selling pressure. Typically you want to see green bars, that's telling you the momentum is strong. Now if we focus on the RSI, which is a leading indicator, you can actually see that although price is ranging, because we can't really see, you can see that price was trading upward here, but when it got to this point here, so from November, you can see the candlestick has just been trading in a range, and that is why you can see the RSI is just flat. You see, it's not typically you want to see an RSI that's also trending up with the price action, but you can see it's flat. It's just flat, telling you nothing is happening. But I want to call your attention to something that's very interesting that's happening. You can see, let's look at this region here. Let's look at this point here. So let me also add another line there. Now, the price is here, and you see buyers stepped into this market and they were taking the price up. You see, we're making higher highs and higher lows, and you can see the RSI also creating high. You can see the RSI. If I look for this, just give me a second where I find this. Okay, I can't remember where it is right now, but so my point is, as we are making higher highs on the with the candlesticks, the RSI is also following in that same direction. But look at what happens here. So if I move this here, now, when we got here to this point here, we were still, the price action continued its upward movement. But look at the RSI, it's going down. This is what we call bearish divergence. The candle, the price action is going up, the price is going up, but the momentum is going in a different direction. It's trending downwards. So this is called bearish divergence, which tells you that a potential downturn is about to happen, or a correction. And that is what we actually got here. So you see, eventually the price had to, pull back. So that's why we saw this pullback. And now what I also want you to see is that after this pullback, which we got to the bottom of the channel, you see, so this bottom of the channel has also been acting as a region of support, that whenever price touches it, it bounces off it, and that shows you that this channel is very strong. Now what I also want you to see is that after the price touched this channel, it bounced off it and it continued this upward trajectory. But what has the RSI also done? The RSI has not replicated this behavior. You see, price has gone up, but the RSI is still flat. You see, it's downwards and flat. So this is to show you that there is still weakness in this market. The price, so true strength is when price and volume or price and momentum do the same thing. Here we are seeing price going up, but the momentum is not replicating that same behavior. You can also see it in the RSI. You see, the price is going up, but the RSI is going downwards. It's trending down. So you can see bearish divergence on the market. You can also see bearish divergence on the RSI. And let's look at the directional movement index if there is strength. Yes, we can clearly see that the plus DMI is above the minus DMI, but the ADX is at 16, which shows there is no strength, because strength is when the ADX is above 25. So clearly again, we can see that on the weekly time frame, we can see from momentum wise, it's a hold because the signal is above the level, which is not a very good, doesn't show strength, even though the candlestick is trading above the 20 SMA. But you need to see that since November, this the candlestick has been trading in a range, and that range is what I identified with this rectangle here. That's the trading range. We will see it more evidence when I proceed to the daily time frame. You can also see that the ADX is showing no strength. So now we're able to get another picture of what is happening on the daily time frame. Now, for the final time frame, let's go to the daily chart. This is where we're going to infer the final consensus and identify our current support and resistance levels. Straight away, this is my parallel channel once again. The 50% line evident here for you. And this is the range that we've been trading, you know, since December. So let me move this vertical line there and let's focus on this region, on this trading range. You can clearly see that the candlestick have been trading mostly within this range. Here, this is at this point, this bottom of this range is your support here at the daily time frame. There's a midline here, which is also a support region, and now the top of this range is also a key region. Now let's just explain what's been happening here. Price bounced off this support, reached this resistance here, bounced off the resistance, attempted again to break out, which it did. It broke out here, and eventually confirmed here, because this breakout, you can't, these are not confirmation. This was a confirmation. Then it met the top of the channel, which is resistance. Look at it. Price has always found resistance at the top of this channel, and then it went back into the channel. This region here, which was supposed to be support, could not hold it, and this failed. And so the price went to the next support region, which is the midline. It failed and tested the bottom of this region that I've drawn here, and it bounced again, found support, went up again. You see it's been trading within this region. Currently on Friday, what can we see? We can see a bearish engulfing candle. Now, this bearish engulfing candle is confirmed by the volume. You can see that the volume on Friday outweighs the volume in the last maybe 3 days. So, first of all, the bearish engulfing candle is a candle that totally envelopes the preceding candle, and that bearish convergence can be confirmed with the volume. So you need a confirmation tool. And the confirmation tool here is the volume. You can actually see this is showing you strength. That this selling action that we're seeing here through this candle has strength. And so this is very strong. And it's bearish in the short term. Now, so that means by probability wise, we expect the price action to go downwards. But we have some positive elements also on the chart. You can see the 20 SMA here, which is just below this candlestick here, this bearish candlestick. So this will first be our region of support, the 20 SMA. If this region is not able to hold, then we have this region of convergence here, where we have our another support at 517. That also coincides with the 50% line. You can see that here. So this will be another region of support that hopefully, and remember guys, once you support, the expectation is that support should hold until it's proven otherwise. So the first support region is the 20 SMA based on this chart. If this region is not able to hold, then the next region of support will be the 517 and this midline here. If this is unable to hold, then the next will be the bottom of this trading range. And so those are our immediate key supports. In terms of resistance, what are our resistance in case the price action reverses and it goes with its trajectory upward? So as usual, the first resistance will be the top of this rectangle, which is at 5, which is around, let's see that. So if I take a horizontal ray to just kind of infer where that is at, that's around 525. You can see that. Next will also be this minor resistance here, which will be around this point here, which is around 534. So this will be your next resistance. And then this double top here will be the next region of resistance. So you see, so once we overcome this resistance, the next will be this, and then this. Then we look to test the top of the parallel channel. Now, what else can we see from a daily time frame? We can see some kind of choppiness, sideways trade. We can see the MACD is not showing you any clear separation between the
level and signal. Although the level seems to be on top of the signal, but it looks, you can see that it's been trading sideways. Look at the RSI. Also, the RSI is not showing a lot of strength. It's at 51. A strong market is anything above 55 to 70. And also, if you look at the ADX, you can see there is no strength here. You can see it's as if the minus DMI looks to cross above the plus DMI, which is bearish, and also the ADX is below 25, which is also bearish. So to conclude the my technical analysis on QQQ, these are the key points that I want us to take away. The immediate resistance is at 525, 526. We also have a minor resistance around 534, and there's a double top at 538. The support regions include the 20 SMA, the 512 to 517 region, which includes the daily support and the midline. And then, if that doesn't hold, is the bottom of this channel at around 507. We also identified a bearish engulfing candle on the daily chart, which we confirmed also by the volume. We also identified bearish divergence from the MACD and RSI, both on the daily and weekly time frame. The MACD shows a hold on both the daily and weekly time frame, and we also established that there is no trend on the directional movement index because the ADX, both on the weekly and the daily time frame, are below 25. So that's my market recap on the QQQ assets, and let's get to the market summary section of this week's video. Summary with the US large cap stocks tracked by the ETF VOO. This week, VOO printed a gain of 1.32%. Year to date, VOO has delivered 2.74%. The short-term bias on the daily time frame exhibits a neutral trend, while the mid-term outlook on the weekly chart is neutral. The Nasdaq, represented by the ETF QQQ, which we looked at earlier, this week saw a change of 1.84%, bringing its year-to-date performance to 2.49%. The daily time frame presents a neutral bias in the short term, while the weekly chart indicates a neutral bias in the mid-term. US small cap stocks, tracked by the performance of VTWO, this week posted a gain of 2.10%. Year to date, VTWO has delivered a return of 2.24%. In the short term, the daily time frame shows a neutral trend, and the midterm outlook on the weekly chart also shows a neutral trend. Canadian equities, tracked by the ETF VCN, printed a weekly change of 2.76%. Year to date, VCN has delivered a return of 2.63%. The short-term trend on the daily time frame is neutral, while the midterm outlook on the weekly chart indicates a bullish trend. Nigerian markets, tracked by the ETF ASI or the index ASI, this week issued a change of 1.38%. Year to date, ASI has delivered a return of 2.92%. The short-term outlook on the daily chart points to a bullish trend, and the midterm outlook on the weekly chart also indicates a bullish trend. The oil commodity, tracked by the ETF USO, recorded a decline of 3.26% this week. Year to date, oil prices have printed negative 1.39%. The short-term outlook on the daily chart points to a bearish trend, while the midterm outlook on the weekly chart is neutral. Finally, Bitcoin, tracked by GBTC, recorded a change of 0.92% this week. Year to date, Bitcoin has returned an overall performance of negative 1.76%. The short-term outlook on the daily time frame is neutral, while the midterm outlook on the weekly chart exhibits a bullish trend. Now, just before we wrap up today's video, I thought it interesting to show the results of the currently in beta testing mode, the Talk Stocks with Me Smart ETF portfolio. As a recap, on the 5th of January 2025, in one of these Market Digest summary videos, I introduced my ETF tracking tool, which I mentioned was predominantly data driven. The idea was to gather a plethora of ETFs that are listed in the US stock market and then gather momentum from this list of ETFs, employing the performance metrics such as the week to date, the 1 month, the 3 months, the 6 months, and the year to date performance metrics. The idea was to gather momentum. So the idea was to find sectors that showed consistent momentum, both in the short term and in the midterm, because the strategy was meant to be a short to midterm strategy and the idea was to hold the top two ETFs for 1 month and compare to the benchmark SPY ETF, which is the S&P 500. As part of the process, the objective function was defined to consider that it must outperform the SPY before predicting ETFs or offering ETFs which we can consider. In addition to ranking the ETFs based on the performance metrics, we employed a lot of statistical measures. Remember, I have a background in statistics, so I was able to create some form of ranking using some terms or some techniques like the Z score. And the idea is to sit in the top two ETFs that offer you favorable risk to reward and then compare to the SPY at the end of every month. The first month result is out, which is the performance for the month of January. And you can clearly see that the top two ETFs that were recommended by the system, by the smart tool, was USO, which is an oil ETF, and TBF, which is a form of 20-year US Treasury ETF. The number of days in which each of these financial instruments were held is also showed on the screen for you, and the individual returns from each of these ETFs is shown. So for USO, it means if you had $1,000, you have roughly 6% of that has your return during this 13-day period. Overall, the portfolio for the month of January, we can see we traded for 16 days, or we held our positions for 16 days, and the overall return within that time frame on the portfolio was 4.63%. In comparison to the benchmark, which is the SPY, which is the S&P 500, for the whole month of January, which roughly I give it 20 days, and that will be a consistent number of days for each month. I understand that some days we have start holidays, or we also have some days the market is up, but just for consistency and easy reporting, I'm just going to stick to 20 for every month. You can clearly see within that same time period, the SPY returned 2.69. Clearly, we can see for the first month, the smart portfolio has outperformed the SPY. And remember, this is just the first month, so this is not yet statistically significant. And so this is just a first result, and it shows some promise. Remember, guys, the ETF tool is still in beta testing. I'm still testing it with my portfolio and a few friends of mine. But if we are able to show statistical significant results with this portfolio against the SPY, then we might think of bringing this out to the public. In closing, as we wrap up today's video, I would like to highlight that the markets remain in a wait and see mode with neutral sentiment across the US large caps, the Nasdaq, and the small caps. Canada, on the other hand, is showing signs of strength in the midterm. Nigeria, however, stands out with bullish momentum in both the short and midterm. Oil is facing short-term pressure, and Bitcoin continues to build midterm optimism. The key events to watch in this week is going to be the upcoming inflation reports. That's the CPI and the PPI. Both reports will be critical for market direction because they could influence interest rates expectation and the overall market sentiment. To conclude, with the mix of signals in the market, I want to caution you that you need to stay adaptive, follow momentum, and manage your risk accordingly. And always remember to keep an eye on key levels. And I'll see you in the next update. Thanks for tuning in. Don't forget to like, subscribe, and share your insights in the comment section. Guys, remember it's free, so please make use of it. I look forward to reading every one of you's comments. Until then, trade wisely and stay informed. Bye bye.